Good evening, everyone. We'll give people a chance to jump in. Tonight, we are diving in on the Alabama real estate market. I'm your host, Johnny Lynum, the military CEO, founder of REI Genius, and this is REI Genius Live. Usually, we try to jump in on Wednesday nights, 8 p.m. Eastern Standard Time. Most weeks, we have a live event going on, or something that may be a conflict. We may not have these weekly sessions. But tonight, our focus is going to be on the Alabama real estate market. We're providing an update on how everything is going. So definitely looking for you guys to participate. If you ask and have any questions, to let me know, and let me know where everyone's from tonight. Drop your city in the chat so we can kind of see where everyone is at. See if we have some investors from the Alabama market, maybe even some realtors, potential investors that's looking to learn more about the market. But yeah, definitely share with me where you guys are from, and we'll get ready to get going here in a second. All right, Atlanta, welcome, welcome, welcome. ATL. All right. Outside of DSMI, I'm not familiar with I. Okay, DSMI. Welcome, welcome, welcome. So really, the goal tonight is we dive into the Redfin data across the state of Alabama. For those who don't know, I'm originally from Alabama. Alabama is or has been uh, my primary real estate investing market since I would say since 2013. We bought our first true rental property that we didn't live in, we didn't house hack or do a live-in rental transition to a rental when we moved with the Air Force, and so we've been kind of hooked ever since, buying that first $25,000 house over on Avenue K in Inslee back in 2013, and picking up one on Second Avenue and doing our first fix and flip here in the DC area, Alexandria, Virginia. Then from there, we just transitioned back to doing virtual fix and flips in Birmingham. And yeah, we've been consistently doing deals ever since then. We took a hiatus 18 to 19 when we moved to Panama City, and we're still active in that market. Ever since 2019, we've been doing deals there. And right now, we have one deal on the market in Huntsville, uh, starter home. And then also, we have 96 units in the Montgomery market right now with our multifamily unit that we're turning over. So definitely intimately familiar with Alabama, growing up about an hour north of Mobile, and digging into real estate. Because one of the things that we know right now, affordability is key. As a real estate investor, we're all about cash flow, long-term appreciation, uh, being able to get into deals. For me, I love the bird strategy where we can buy, renovate, we can rent the property out, refinance it, then repeat the birth strategy. And so that's one of the strategies that we love to employ. But right now, being able to find properties that, uh, when you underwrite and analyze, that actually hit that mark, it can be a challenge right now. And so one of the things that we love with Alabama is the affordability. Right now, on the multifamily side, when we purchased fourth quarter 2022, and actually uh, fourth quarter 23 with the last 20 unit that we bought, that we right around $55,000 a door with the acquisition. And so there are deals still out there. I think the 3-1 that we have on the market we bought for 87,000 back in the fall last year. So there's definitely opportunities out there if you know where to look. Both of those deals, the multifamily deal and the single family deal, were off market deals that we found. And so there are definitely opportunities, and we're going to talk about that tonight as we dive in. And so we'll start from the top of the state with Huntsville. We'll work our way into Birmingham, Montgomery, and we'll end with Mobile. And then I'll throw out some questions and kind of share with you guys. And then also one of the things that we do have up is my 5-day boot camp. We done the last one we done was in January that we completed, and this one will be next week, April 8th through the 12th, 8 p.m. Eastern Standard Time. And we're gonna be diving into all things entrepreneurial, multifamily, and giving you guys the strategy to build wealth. Because one of the things that we all have to do and continuously do is look at how we can grow our income as investors. And one of the ways that we can do that is through a side hustle, starting a business, or perfecting our existing business. And so that's one of the things that we're going to be talking about next week. The entire week, we're going to be talking about everything from the mindset, the goal setting strategies that the wealthy use. It's all going to be based off my Millionaire Real Estate Success Strategies book, but really going through and digging into the framework and the systems that I found from interviewing 30 different millionaires that, all different walks of life, a lot of them in the military, just like myself, that started as a side hustle with real estate investing and continue to evolve it to eventually find financial freedom. And so make sure you guys hit the thumbs up button, subscribe if you hadn't locked in yet, and share this video tonight as we get into ready to dive into the Alabama real estate market. And then if you want to get more information about investing in Alabama, maybe you want to be a passive investor, or maybe you're interested in learning more about some of the strategies on how you can build passive income, then definitely tap in with your free strategy session that we offer. To those that are interested, because their success leaves clues, and that's one of the things that we're passionate about with REI Genius, and is being able to educate people who are committed to building wealth and giving them the tools of success. So if you're interested, definitely take advantage of the free strategy session with myself or Coach Jessica. We'd love to sit down with you and hear your real estate investing goals and see how we can help you and point you in the right direction, give you some tips and pointers and some resources that you can use right now to start increasing your net worth. So, with no further ado, let's jump in. I'm going to share my screen here, and we're going to start with Huntsville and start going in to the Alabama market. And we'll do the entire window. Boom. And so Huntsville, Alabama. So Huntsville is kind of the most notable, I guess, the market in Alabama that has the most notoriety when you start looking at Huntsville, when you start looking at real estate markets, just because of the enormous amount of job growth, population growth with inbound job seekers, and you'll see for as the population demographics that it's one of the highest educated MSAs within the state. Just with the amount of degrees and advanced degrees that individuals in Huntsville have, just because of by nature of the market that you have there with being a large industrial base. You had the Redstone Arsenal that's there. You have a lot of contractors that support the base. You have a lot of contractors that's in the space industry, with Blue Origin being one of the largest there. You have was the ULA as well right there in Decatur. So a lot of military industrial complex that's held up there. But one of the things that we continue to see and track with the Huntsville market is that, and I think this is the case around most of the United States, things have slowed down with interest rates having an impact. But we see that it's still somewhat competitive. It's not completely a buyer's market, but things have definitely slowed down looking from last year, with the average price being around 320,000, which is around almost 3% lower than last year. And then with the median sale price is actually up for 2%. So a lot of people going into this year, even last year, was just talking about, hey, the real estate market is going to crash. It's going to be another 2008. And but a lot of people, what they don't do, they don't go back and look at the data and understand what happened the last time we had high inflation, when inflation was 7, 8, 9%, or even higher, back in the early 80s. And what did the real estate market do? And we saw that where the prices shot up, and then guess what? They kind of stayed in the same place for almost a decade across the 80s, even though we know the interest rates got all the way up into the mid teens, or the upper teens, actually, 16, 17, 18%. And so we're kind of seeing that trend now, whereas the market is shot up. 2021, 2022, there was mass appreciation. Shout out to all the investors who own real estate, because guess what? You got a lot of appreciation for being an owner and owning assets. And we know that real estate is one of the best hedges against inflation, because when inflation happens, usually with housing, it's going to take more of those dollars that are losing value to buy your real estate, to buy your asset. And especially situation where there's a lot of cheap money, low interest rates for homes and mortgages, and there wasn't enough inventory and supply, and there was too much demand, and we saw prices skyrocket. And that's kind of where we are right now. And even right now, so we're seeing prices are still up compared to last year, that they've gone up 3%, which is kind of normal, modest appreciation. And then with the right now with Huntsville being one of the most expensive areas in the state, with the price per square foot being around $162 per square foot, which is up 2% from last year. So not a lot changed. Days on the market, we see the transactions have slowed down. It's improved 15. Well, it's gotten worse by 15 days. So let's take it right now. Median days on market for a listing is 63 days, which isn't terrible. Which we know that 6 months of inventory is kind of where that balance is for most markets of what you want to see. And so right now with the Huntsville market, when you look in to more into the data, that you only have 18%, well, 18% that sold over list price, and about 98% of the sale to list price. That mostly, people list close to what the value of the property is, and it takes about 53 days for a property to go pending right here. And if it's a really hot market, it can happen in 13 days. And so overall, Huntsville, the market is healthy. It's continued to moves right along, 3% increase over time since last year, and it's still somewhat competitive here with a score of 47 when you look at Redfin's complete score index. And so all in all, it's doing pretty good. When we move over into Birmingham, we kind of see that the one kind of look at some of those subtle differences. That one, the median sales price is almost half of what it is in Huntsville. Say that again. The median sales price is almost half, because when Huntsville it was 320,000, and right now we're seeing here at only 165 for Birmingham MSA or Birmingham market. And one of the things that you have to realize is there's a big difference. So a lot of times when you start talking about affordability, that's going to drive the location and where people actually move to, just based off the pricing there. And one of the things that we see here with the Birmingham market is the homes sold 209. That is actually year over year more homes are being sold, but that median sales price is down almost a little bit over 8% from last year, and the days on market is around 74 median days on market, which is up 32. So it's almost double from where it was last year. So we can definitely see that the market is slowing down. Where Huntsville is $162 per square foot, in Birmingham it's only $113, and that's actually trending down, where it's 3.4% less than where it was last year. So that's kind of what the data is sharing, and it was showing us. The competitive index here, 44 days. I think Huntsville was saying about 47. So it's still somewhat competitive, and home sale in about 2 months, which isn't terrible. When you look at the grand scheme of things, that you still have 21% being sold above list price. But this is a big one here, that the sale to list price. So people list about 5% over what they actually will sell the property for. What we're seeing there, which is actually declining, which has gotten worse by 2% compared to last year, with Birmingham. And you can see here that 72% of the people in Birmingham were searching to stay within the Birmingham metro area. So a lot of people just moving around. And Huntsville was the most popular destination among Birmingham home buyers, followed by Mobile and Montgomery. So a lot of people in Birmingham looking around the state. And I guess another piece of information here, Atlanta home buyers search to move into Birmingham more than any other metro, followed by LA and New York. And so that's one of the things, like with Redfin, and because they have so much internet traffic, they have so much data with searches for listings and things like that, that they kind of look at some of the trends with where people are moving to, where they're looking to buy houses, and they can provide that data, just to kind of let you know where things are at and where the trends are moving towards. So that's also good to know. And we'll jump back to Huntsville. We didn't go that far down, but to look to see where are more people inbound. So right here, we see looks like Anniston Home Buyers, which is I guess a tertiary market of Huntsville, where most of the people look to move to Huntsville was from, followed by Birmingham and Washington. That makes sense. So really, so that's an interesting one here. Panama City was the most popular destination among Huntsville home buyers, followed by Myrtle Beach and Palm Bay. Okay. Um, 68% of the Huntsville home buyers search to stay within the MSA, the metropolitan area, and what else? And so you can see here that you just have inbound from Seattle. That makes sense because Blue Origin is owned by Amazon, and that is the headquarters for Amazon out there in Washington State. but then also like San Francisco, Los Angeles, and we have there Chicago. Okay, is this DC area? Oh, okay. New York, a little bit further south. Okay, there's the DC market there. Um, that more than 139 people searched to move to Huntsville were searching from Washington, which makes sense because you had the military industrial complex there with the Redstone Arsenal. And you have a lot of, I think you have a Army three-star command that's there, and it's a lot of space industry there. So a lot of details. You can dive more into this data and kind of see the net inflow, where people are coming from or where they're looking to move from these different cities, and as you go. And so we'll jump into Montgomery, kind of moving our way down I-65, started Huntsville, Birmingham, and now Montgomery. So the thing that you'll see is now going into Montgomery that is pretty similar, if you would, to Birmingham, when you start looking into the median sale price of 160,000, which is actually what we saw. Birmingham had a decrease by 3%. Montgomery has increased a little bit by 3%, and we're seeing the median days on market around 59 days, which seems like Montgomery is still kind of stabilized. That there was almost a doubling in the median days on market in Birmingham, which ended up around 60. So last year it was really, really hot. And Montgomery's kind of just ho humming along, that it's kind of consistent. The median sales price going up a little bit. The median days on market is only 3 days worse than last year. So not a whole lot of change there. Um, and when we kind of start looking at the for its competitiveness, not as competitive at 39. I know, I think it was Birmingham was 44 and Huntsville was 47. Um, the sales to list price has gone up a little bit over 1% over the last year, and homes that sold above list price only at 13%. So I think more Huntsville was around 18%. So not too terribly far off. And hot homes can sell for around 31 days, and most homes go pending in 60 days for the median, which is which is not bad. So Montgomery is just consistent. We kind of see that in the data from 2022, that it never really had that spike over the last 3 years. That it's just kind of constantly been consistent, which that's what you really want from your market. If you go back and let's look at Huntsville, I know Huntsville with all the people moving in, we probably would expect a little bit more um, for its list price. And we can see here 2021 to 2022 that the average home price was, well, it sold for over 100%. And so now we see that the average listing is below. But back then during those market, that it was consistently this part here, that it was around 103, 104% of list price, that everything was selling over list price. And so we can see here that the market has definitely shifted as we go into 2024 with the increase in interest rates. But Montgomery is holding steady. We don't get a lot of the trending data that we see with the larger markets like Birmingham and Huntsville, just because they don't have a lot of data that they can share. Going into Mobile, so as we talked about last time back in when did we go through this? I think it was in the February that we looked at January data. That Mobile is kind of the darling, if you will, the sleeping giant for the Alabama market, with $119. That is one of the cheapest in the market, but it is one of the most competitive. Like right now, we see here the median days on market is only 44 days. Median sales price is 189,000. It's up 3.3% year over year, and we know that that's a little bit higher than Birmingham was 160, and Montgomery was, let's see here, 160, and Birmingham was one around the 160 mark as well too. So we kind of see 165, and so Mobile's at 189, 44 days on the market, which is, I think, the best of the four metro areas. And we also see that it's competitive. Well, with 56 right here, the score, which is the highest in the state. Sales to list price is the highest at 97%. And right now, so homes that sold above list price, that they have 26%, 26.4 homes sell above list price, which is the highest of the metro areas, um, with homes going pending in only 42 days, which is definitely the best that we've seen amongst the market. And we can see kind of Mobile's kind of been going just home humming along as well. That had a little drop here in 2023, which I think most people did with rates, and we're just moving. But you didn't have that wild swing where it was consistently over list price in the 2021 2022 time frame. And what looking at kind of the data, that you got people in the Chicago, LA metro area that's looking there. 63% of mobile home buyers look to stay within the metropolitan area. And interesting enough, Rochester was the most popular destination among mobile home buyers, followed by Destin and Pensacola. I wonder what's going on in Rochester. Why are people looking at Rochester? It's probably something that's being swayed with one of the large nah, net outflow is only 8 people. Okay, so it's not a whole lot of data that are people leaving to go to Rochester. So a company may have relocated or something. So you see here, there's not a whole lot of data that's driving these numbers here on people leaving Mobile. So that's the things you got to look and dig into the numbers, get a little bit more data to kind of make an informed decision on what's going on in the market. But that, in a nutshell, is what's happening in Alabama right now in the real estate market, and just kind of understanding how the market's shifting, how it's changing. And it's something that you want to kind of keep at the back of your mind, especially if you're looking to buy rental property, if you're looking to buy fix and flip property still. And depending on what your strategy is, that all that can go into, okay, your calculus on what decisions you're making, on how you're projecting your analysis on your exit, on what the price per square foot that you can sell, what are the days on market that you can expect, whereas now you can project your holding costs and things like that. That all goes into your profitability as a real estate investor. Do we have any investors that invest in Alabama that's live with us now? I see Joel here, Roll Tide. Yep, Joel there in the Montgomery area. But right at this point, just draw. Anybody have any questions? I really wanted to kind of go through the data that a lot of times that you see the national news, the national data, but it's really good to kind of understand your individual market and understand how your local real estate market is performing versus the national numbers, because real estate is local, 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 local. And the more information, the more that you're informed about what's going on in the state of Alabama, the better off you're going to be. And and it has some really good components to it. That the market is stable. It's not too crazy, like the Austin, Texas is, the Boise, Idaho markets that have those wild swings that you know seen crazy appreciation the last few years. That now that with the increased interest rates and the the slowdown of inventory and things like that are driving prices to drop drastically compared to where we are right now in Alabama, where things are just kind of going along. We're seeing like maybe 2 or 3% decreases, like in the Birmingham market. Montgomery's consistently going along. Huntsville slowed down a little bit, but it's still a strong market. That's almost the median sales price is almost double most of the homes there in Birmingham and Montgomery, which you can get a home there for. And at the end of the day, when you look at Alabama, Alabama is one of the top states when you look at the least amount of home expenses. When you take into account what someone had to pay for the shelter costs and for property taxes, that the percentage it hovers around a low 30 percentile compared to other cities where you're going to be spending 40 to 50% of your income is going towards your shelter costs. And so that's one of the things that we love about Alabama. You can still get cash flow in real estate, and you can still build your portfolio that can drive your retirement, that can drive your passive income, and drive your wealth creation into the future. Because one thing that we do know, that the Federal Reserve their projection is to have inflation at 2%. That's their goal, is to keep inflation at 2%. We know the last couple of years it's been higher than that after we printed all the stimulus money during COVID. But if you think about it, the goal of the Federal Reserve is to have inflation at 2%. If we maintain inflation over 10 years at 2%, guess what? The dollar is going to lose 20% of its value. So think about it. 2% a year, 10 years, 2 times 10, 20. So in 10 years, if the Fed is successful in maintaining a 2% inflation rate, because right now it's been high, it's at 3%. Last year was like 6, 7, 8. So think about it. In 10 years, the Fed is telling you that the dollar is going to be worth 20% less. So guess what? If you do that math, and we know real estate is a hedge to inflation, it's going to take 20% more US dollars 10 years from now to buy the same real estate we're buying today. And guess what? That appreciation that happens, the bank doesn't participate in it when you go and get a 75%, 80% loan. That now you're paying that money back over the next 10, 15 years or whatever the term is. You're paying that money back with dollars that are worth less in the future. And so that's how you leverage real estate. And you're able to leverage debt in order to become successful, in order to build wealth. If you do it right, where you don't become over leveraged, you want to keep a tolerance where you got to be able to sleep at night. For some people, they're fine with like pushing the envelope, having as much debt as possible. Some want to scale back. Maybe they don't want to have debt on their personal residence. I would say if you have a sub 4% loan, you probably should look at accelerating and paying it off sooner. Look at paying off other things or taking that money and investing it somewhere where you can get higher than a 4% return versus paying down your mortgage. But each and every one of us got to kind of figure that out. But the thing is that you got to figure out how and what assets you want to invest in because inflation's not going anywhere. They want to just try to keep it tamed at 2%. But just know the more assets that you own, guess what? The value is going to go up over time because it's going to take more money to buy those assets. Look at it. If you think about it, like a house, what was the price of a house? If you look at the same house that was the price in the 60s, it was more expensive in the 70s. In the 80s, it was more expensive. In the 90s, it was more expensive. In 2000, it was more expensive. In 2010, we went through a real big recession cycle with the housing market just because we had over 50% of Americans had adjustable rate mortgages, and a lot of people their mortgage payments nearly doubled, if not increased more than that. And so we had a lot of people now. The majority of Americans have fixed rate debt where they're locked into low rates, low payments, and it's not changing anytime soon. And so the thing is that it behooves you to figure out what asset class you're going to invest in. For me, real estate was my business of choice. We would buy dilapidated, rundown houses, fix them up, renovate them, then keep them as rental properties, refinance them, and keep them long term. And then eventually we started getting buying apartments in 2020 and, selling single family, taking a profit and buying multifamily the whole long term. Because guess what? The larger real estate, if you own a $2 million apartment building in 10 years and it goes up 25%, guess what? 25% increase on a $2 million property is a heck of a lot more than a 20% increase on a $200,000 property. It's 10x. And so that's the thing. So, 25% on 2 million is a whopping $500,000 of increase. And at the same time, your residents have been paying down your mortgage. You had a crazy bonus depreciation tax write off for the property, and then they've been paying down the mortgage, and then at the same time, it's been going up in value. That is how you build wealth. And what better asset to use than a hedge against inflation that we have with real estate? And so, something to think about as you go through. But a lot of people are getting hung up on the interest rates and understanding that hey, interest rates are high right now. They may go down, they may not. But if you buy asset that cash flows at today's rates, then you're good. And it just means that you have to buy cheaper and you just have to go through more and more deals until you find a deal. But we picked up an apartment building back in December at a 7% owner financing rate, and guess what? It cash flowed because it produced enough income, and there was enough meat on the bone where we can increase rents in order to cover the mortgage and increase the value over time. And when I say over time, I mean like over a 6 to 9 month period. And so that's where the information comes in. That's when coming into having the strategies, having the tactics on how to build wealth are super important. Whereas that now you can do one multifamily deal that'll change your life, literally one deal that can change your life. Whereas you have an 18 unit paying you $4 or $5,000 a month, or you could get into a bigger deal that's paying you even more, where you bring on a couple different partners, and you're only limited by your creativity on how you can put these multifamily deals together. Which is why I really, really, really love multifamily, just real estate in general, because of the tax advantages and the ability to grow your wealth, and you can touch it. A lot of people, they focus on the stock market, but real estate is a great hedge against the stock market as well too, where you can diversify your portfolio. You don't have all your eggs in one basket in the market that's following whether it's a mutual fund or you're trying to pick individual stocks. But now you can actually control and force appreciation where you have some say so in what happens in the day-to-day operations of your property, what improvements are happening, what you're charging for rent, and making those decisions where you can go and actually have a say so in what's going on with your wealth, and you're not locked in for whatever 59 and a half years or whatever it is where you can't take out your money out your retirement account. And one of the articles I read actually yesterday, since April was financial literacy month, that they were just talking about how most Americans aren't prepared for retirement. they're actually looking to push Social Security out further and tell people they got to work till they're 65 or 70. Can you imagine if you're working a job that you hate doing until you're 65 or 70 years old? That would literally suck. And so that's the thing that we got to feel, that we got to realize is like, how do we start positioning ourselves through a side hustle, a second business, and start building that parachute for us to just kind of glide and coast into whatever we want to call retirement, or doing something that we could do forever. But guess what? You want to be in control and make that decision. You don't want anyone to have to dictate to you what you're going to do and for how long that you're going to have to do it. And so that's what I love with being a business owner, entrepreneur, and real estate is the vehicle of choice for myself to make that happen. And so that's the thing I encourage you to do is look at your skill set. Where can you make improvements? What can you do in order to level up and take back control of your future? Whether you're looking to retire, whether to get time freedom, whether you're looking to spend more time with your family, your loved ones, whatever it is, that I just want to make that plea to you guys to take advantage of it. And so definitely want to give you guys kind of the free giveaway, the 7 mistakes investors make, and share kind of the report that I put together on like my mistakes that I made in building a multi-million dollar portfolio. I think right now we're over $14 million with over 120 units. And we have some other things working in the background with some new development in the multifamily space that I can't wait to share with you guys as we get things locked in here in the next few weeks. And we just got to continue to grow. And I'm super excited about all the progress with my clients. We're taking down deals, learning just the ins and outs of multifamily, getting out there, meeting new investors, looking at raising capital, and everything that it takes in order to be successful in this space. So definitely, if you hadn't got the download, get my 7 mistakes report. And then for those that are interested in the free strategy session to kind of go through and look at where you are right now with your retirement goals, with how you're looking at leveraging real estate, and you're interested in getting some specific tips and some strategies that you can leverage in order to kind of diversify your portfolio from the stock market, but then also look at how you can increase your passive income. We would love to have that conversation with you and get you going, because real estate will change your life. But guess what? You got to start taking action, get the information, because inflation is not going anywhere. And guess what? Everything is getting higher and higher and higher. When you start looking at how expensive groceries are, gas, fuel, if you go buy a house right now with interest rates, the best time to buy real estate was 10 years ago. And guess what? The next best time is today, because guess what? It's still going up slowly but surely. And yeah, that's all I got tonight. Definitely, if anyone has any comments, I'll hang around for a few minutes for questions. And yeah, definitely check out next week. Send me a message or go to johnnylynum.com. I have my 5-day boot camp, Entrepreneur Mastery, whereas that we're going through, and we're going to be walking through 5 days. We're going to talk about mindset. We're going to dive into some of the tenets of successful millionaires. What does success lead? I tell you guys over and over again, success leads clues. Like, you can go out here right now, and there's no greater time in history to really learn about what people are doing to be successful. Much as I share about how you can go and do success, it's like people that come to me, a couple of people that I've had come to me in the last 6 months, they say, "Hey, I've done a deal off some of your stuff that you put together, and you just kind of showed it. I took it, laid it out step by step, and made it happen." That it's not rocket science. People that are successful aren't smarter than you. They just don't quit. They show up consistently, and they know what they want out of life, and they go get it, and they go make it happen. And so that's what that we're doing with REI Genius, is just informing people, giving people information, and encouraging them to go and take action in order to build wealth and to become the best CEO of their last name. And so that's what it's all about, each and every day. And the more that you show up, the more successful you're going to be. So I don't see any questions. Give you guys some time back tonight. Make sure that you tap in for the boot camp if you're interested in learning the strategies that millionaires are using to build wealth. And we're going to lay it down and go through the entire week. And we're going to help people get success moving in the right direction for them in 2024. And we're going to make it happen. So I'm Johnny Lime, the military CEO, and I will see you guys next go round. Matter of fact, I'll see you guys next week in my boot camp. And you guys be blessed. Let's go. Let's make some equity happen together, y'all.